Good afternoon and welcome to your weekly FX options report. Today is Wednesday, June 9, 2010. In midweek trade, the major U.S. stock averages are posting in advance, with the major indexes higher by as much as 1% in today's session. Now, focus has been on the Federal Reserve, with Fed Reserve Chairman Ben Bernanke testifying before the House Budget Committee today. Now, Ben Bernanke did say that he expects to see growth in the U.S. economy coming in between 3 to 4% in 2010. Earlier this week, Fed Chairman Ben Bernanke did say that he does not expect to see a double-dip recession in the U.S. Looking ahead to the rest of the session, the Fed's Beige Book will also be coming out. Now, earlier this morning, the Commerce Department reported that wholesale trade in the U.S. posted a modest gain of 0.4% in the month of April from the upwardly revised figure of 0.7% in the prior month. This week, central banks are in focus, and both the ECB and the BOE will be announcing their interest rate decision on Thursday. Now, last Friday, the Labor Department reported that non-farm payrolls in the U.S. saw a gain of 431,000 from an expected gain of plus 500,000. Now, at the same time, the unemployment rate in the U.S. fell to 9.7% from 9.9%. At the end of last week, both a weaker than expected employment report in the U.S. and sovereign debt concerns regarding Hungary weighed on overall risk appetite. Now, taking a closer look at the spot FX market, in midweek trade, the U.S. dollar is trading mixed, higher against the Japanese yen, but lower against both the euro as well as the British pound. The euro has recovered from fresh four-year lows against the U.S. currency, which were below the 1.19 level. But at the same time, the euro did hit an all-time low against the Swiss franc, touching 1.3744. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we'll take a closer look at the individual IC FX option pairs, starting out with the AUX, which is the U.S. currency, against the Australian dollar. Now, for that pair, the bullish bias does remain above 114. The RSI is mixed with a bullish bias, and the preference of trading center analysts is long positions above 114, with targets standing at 123.65 and 129.75 in extension. For the BPX, which is the U.S. dollar against the British pound, the upside does prevail. Now, the pair is pulling back on its new support or former resistance ahead of a rebound, and the preference of trading center analysts for the BPX is long positions above 67, with targets standing at 71 and 73 in extension. Now, moving on to the CDD, which is the U.S. currency against the Canadian dollar, consolidation is expected. Now, the RSI has struck against a major resistance around the 70% area and is reversing to the downside. The preference of trading center analysts for CDD is short positions below 108.75, with targets at 102.50 and 99.50 in extension. Moving on to the UI, which is the U.S. dollar against the euro, the upside does prevail. Now, the pair has rebounded on its support and has broken above its previous high. The preference of trading center analysts for the EUI is long positions above 78, with targets standing at 84 and 86 in extension. For the SFC, which is the U.S. currency against the Swiss franc, the upside does prevail. Now, the pair has struck against its resistance and is facing a pullback on its new support. The preference of trading center analysts for the SFC is long positions above 112.80, with targets at 117 and 119 in extension. Last but not least, looking at the YUK, which is the U.S. currency against the Japanese yen, caution is advised. Now, the pair is pulling back on its new support, and the RSI is mixed and does call for a caution. The preference of trading center analysts for YUK is short positions below 92, with targets standing at 88 and 86 in extension. In our next segment, we'll take a look at the weekly trend opinion. Now, last week, the U.S. dollar strengthened against the currencies, especially against the majors. Now, the bullish trend does remain intact, but many pairs are also approaching strong levels. Now, because of that, trading central analysts will be cautious regarding the U.S. currency against the majors and will be looking for reversal signs. In terms of portfolio performance, since its inception, which was in August of 2007, it is higher by 1,353.55%. And since the beginning of this year, which is January of 2010, it is higher by 73.45%. Now, we do have a couple trade alerts for you here, including one for the NZD, CDD, as well as the PCO. Let's start out with the NZD. Now, for that pair, Trading central analysts are considering calls on the New Zealand dollar as recommended in their last follow-up. Now, the pair has rebounded on its new support and is expected to post a further advance because the RSI is turning higher. Trading central analysts will also be looking at the CDD, specifically puts on the CDD, as the pair has struck against its new resistance and should face weakness as the RSI lacks upward momentum. Last but not least, for your trade alerts, we will be looking at the PZO because further US dollar weakness is expected and the pair does remain within a bearish channel. Now, the PZO has also struck against its new resistance and the forecast calls for a down move towards 126 or even 120.50. Looking ahead to next week, trading central analysts will be looking at the AUX, PZO, as well as the SKO. Now, trading central analysts will be looking at the AUX because it is on the upside and has struck against strong resistance at 123.65. They will be looking at the PZO because it has struck against resistance and does stand within a medium-term bearish channel. Last but not least, they will be watching the SKA because it is more bullish since it broke above its bullish channel upper boundary. And that wraps it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.